explosive rallies across the crypto space, with EOS being no exception. EOS is up 6% almost as of today on February 7th, but we're seeing even more bullish action in other cryptos. I'm looking at here, Polygon is up 16%. Shiba Inu is almost 50% up. They're up even more than that as of a couple hours ago. But the overall theme is that we're green across the cryptos, not so much in the equities, but that's a whole other story that I want to cover here today. When we zoom up on our EOS chart up close, this is our 30-minute linear chart. My primary pattern is still red. There's nothing that has happened to invalidate that perspective. Doesn't mean that the green pattern is looking more and more likely as we go. My primary pattern calls for this as being an A and a B, with us completing a C wave at this moment. This is a very similar interpretation to the one that I have for most of the cryptos, honestly. We have almost the same thing in Bitcoin and Ethereum as well. And the reasons I think this is that this looks like a three-wave corrective wave up. The B wave doesn't have any particular impulsive look to it. And so far, this C wave was fitting within our diagonal trend channel lines as pictured here. We have broken up past that, so there's a good chance this is actually a diagonal. I feel like it's extended a little too high for this to be the classic ending diagonal or leading diagonal throwover. So this could very well just be the C wave. When we look at the extension of this A and B, typically you don't extend past the 1.618 extension of the AB for the C wave. And look at that. We hit that perfectly before pulling back slightly. Are we going to pull back further? Are we going to just blast right through that? It is yet to be seen. Sometimes you see extended C waves that go even higher than that. We actually saw that in the S&P 500, where we had our C wave break through the 1.764 extension over the past few days of trading activity. You can see that on the 5-15-minute chart, not so much on the big picture, but I'm not going to rule it out. We're seeing similar action in Bitcoin and Ethereum. They are also getting very close to the maximum that you expect the C wave to hit in a corrective bounce. Doesn't mean you can't have that. So if you have the glass half full view, that's a very good sign. It means we have a lot of bullish pressure pushing upwards. The alternate interpretation is that this is actually not at all an ABC, but rather it could be a nested 1-2, maybe another 1-2, maybe a 1-2 here. Maybe this is a leading diagonal 1-2. Actually, it would look better if I put it like this. Maybe that's a 1-2. So 1-2, 1-2, and then in the middle of the third wave of some sort. Could be in the middle of a third wave. The way this thing is taken off, it would make a lot of sense. If that is the case, I'm actually going to extend that out, assuming that our this is actually the 0.618. The 1.236 would be where the top of your third would be. So ultimately, 287 is about where you'd expect this to top out if it is leading diagonal, but doesn't mean we would be out of the woods because this looks very non-standard. We would have to hold 199, which was our low that we hit on January 24th, for this green pattern to remain valid. Assuming it's a leading diagonal, we would expect a pretty deep retrace because that's what happens usually after a diagonal. They're not as bullish of a pattern as an impulse would be. Not a bad thing. However, as I mentioned, diagonals are dangerous because, well, it could easily be an ABC up. So they're not clear like a 5-wave impulse would be. Shifting to our big picture logarithmic daily chart, this chart is available in the description below, so be sure to check out my TradingView link. The patterns overall have not changed. I've actually added a secondary pattern. I know I've been talking about this green pattern as if you guys already knew about it, but this is actually a new pattern I've added. The old green pattern was invalidated with our break of 233, so that has been removed. So this new green pattern is a new pattern altogether, not related to the old green pattern, and that has this entire correction being complete. That means the low that we hit at 199 is behind us. We're not going to go any lower. For that to hold, we need to make sure, again, not to break below 199. That is the maximum retrace point of a small wave 2, as we saw in our small picture chart. And we would need to see a legit 5-wave rally up. So we need to see an impulse shoot up. This is a pretty good start so far, but on the big picture chart, it doesn't look as bullish. It does look more like a consolidation. So only time will tell. We'll have to see how this develops. Otherwise, we are still primary red. That is still my expectation. And the reason for this is not so much looking at the EOS chart alone, but looking at all the other cryptos as a whole. Bitcoin and Ethereum, they have a lot of downside left potentially. I'm actually going to shift over to the Bitcoin chart. It's actually not the official chart I was using, but we have a big support well below us at around $24,000. So there's quite a bit of distance below us that we can fall. And the way the fibs are working out, I would not rule that out from happening. So you never know, that might be enough to pull us down in EOS. However, I don't think there's too much downside because we have a major support below us. I went over this in the last video or two. 128, that is the bottom from our March 2020 crash. That was the everything crash. And we cannot break below that because that would invalidate this entire thing being a wave one. Because number one rule of Elliott wave theory, you can't have your wave two retrace more than the entire length of wave one. So that is why it is crucial we don't break that. EOS is one of the few cryptos that is flirting with that major support. There's another crypto or two that's also getting a little uncomfortably close to that. So good thing is very few of them are doing that. And because cryptos move together, they all follow the same sentiment. I don't see EOS breaking its pattern the way some of the others have, like Bank Core Network Token and Elrond and some of those less Filecoin. Some of those have invalidated their pattern. They don't look very good. EOS is still looking good. So if we do pull back a bit lower, this purple box is where I'd expect us to go. I really don't want us to see us go below $1.71 because that is the 2.0 extension of this 1.2 that I'm highlighting here. And again, 128 is that major support. That is very close to invalidation. Deep wave twos are fine, but we cannot get too close to that. We have this diagonal channel trend line. So depending on where you think the channel goes, I would expect this to coincide with whatever pullback we may have remaining in other cryptocurrencies. However, if there's any candidate for a crypto that may be completely done with its downside, I would say EOS is it, just because we have pullback so far already. We've already hit one of the ideal target retracement points at $1.96. I think I said $1.99, but pretty close to the 1.764 extension of our 1.2, which is a typical landing point for our C wave. Look at the big picture. There may be some confluences there. If we actually hit a 1-to-1 ratio of our previous A wave, I'm actually going to do that real quick right now. So from here, from A, retrace to the B wave, the 1.0 extension of that actually falls exactly at 128. Who would have thought? These Fibonacci's are pretty crazy. So our ideal retracement would actually be right on that red line based on the fact that C waves typically retrace. Well, they typically extend a 1.0, the 1.0 extension of the preceding A wave. It's a equals C equivalency for short. So pretty interesting stuff that there's so much confluence at that level. Not surprising. So for all these reasons, red is still my primary. Not a reason to panic. However, I've been reiterating that now is the time to buy. Be greedy when others are fearful. We are so close to the bottom. We have no reason to think our overall bullish pattern is about to break across other cryptos. Other cryptos look even stronger than EOS. EOS is a little riskier because it's a bit newer, doesn't have as much history. So I will say again, as I've been repeating in all my other videos, diversify. I love EOS. You should too. Our upward projections are pretty crazy. This thing could have some incredible returns, but just like picking speculative growth stocks in tech or biotech or whatever, most of your picks end up being wrong. Now, I'm more confident in cryptos than I am in stocks, individual stocks, of course, stock picking, but pick a bunch, have 7 or 8. There's a lot of great altcoins out there. I noted that, again, SHIB and Polygon are going up. I love Dash. I love Polkadot. There's a lot of other ones, Bitcoin Cash. You know, be generous, buy several different ones. You never know which one's going to outperform. You never know if one's going to crash and just, you know, kill itself over some kind of invalidation. Don't want to get caught holding the bag on that. So I'm going to have a lot of more videos highlighting when I'm buying, what tranches, what strategy, and also what our return projections are versus the risk based on the strength of the pattern. So subscribe. That way you don't miss those things. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.